Good afternoon, and thank you for joining us. I'm Kevin Mowbray, Lee's President and Chief Executive Officer, and with me today is our Vice President and Chief Financial Officer and Treasurer, Tim Millage. We're excited to be here today to share our progress we've made on Lee's digital transformation tied to our three-pillar growth strategy and the compelling investment that builds value for shareholders. At our core, Lee Enterprises is a leading provider of digital products and services and high-quality, trusted local news and information to communities across the country. 7 out of 10 adults in our markets depend on our local, relevant, and engaging local news that only we can provide. Our platforms reach more than 47 million unique visitors each month across 77 attractive mid-sized markets. Lee's strong presence as the trusted source of information in the communities we serve, combined with the cutting-edge digital capabilities and a powerful local sales force, is the foundation of our digital transformation. The success of our transformation is reflected in the continued rapid growth of our digital subscriptions and our digital-only audience revenue. We're the fastest growing digital subscription platform in local media in the USA. Lee achieved an exciting milestone in the first quarter, reaching 450,000 digital-only subscribers, representing a 57% year-over-year growth and exceeding the halfway mark of our target of securing 900,000 digital-only subscribers by 2026. And our Amplified Digital Revenue Agency is also growing dramatically, which is helping fuel the $43 million of digital advertising and marketing services revenue in our first quarter. Under the guidance and oversight of our board of directors and our leadership team, our continued execution on our growth strategy sets the stage for significant long-term value creation. We have a lot to be confident about at Lee, and we believe we have the right digital transformation, and we're pleased with the progress we're making. But don't just take my word for it. Warren Buffett also believes we're well positioned to execute on the digital transformation strategy. As our single largest stakeholder, he remains confident we have the right team to navigate the digital future. But before we go too deep into our strategy, let's take a look at some of the proof points that give us confidence. We launched our three-pillar strategy in early 2021. As you can see, we've made tremendous progress throughout fiscal year 2021, including industry-leading growth in digital subscribers and digital agency revenue. For fiscal year 2021, total digital revenue grew to $189 million, and our first quarter results demonstrate the growth is accelerating even more in fiscal year 2022. Execution on our three-pillar digital growth strategy is the core of the value we're creating for our shareholders. Sustainable long-term revenue growth from our three-pillar initiatives will drive margin expansion and stronger free cash flow, which will fuel our continued debt reduction and balance sheet enhancements. Enhanced operating cash flow and profits, a strengthened balance sheet, and multiple expansion fueled by increasing recurring high-margin digital revenue creates a strong path to significant long-term value creation for our shareholders. Let's spend a few minutes going a little deeper into Lee's three-pillar digital growth strategy that is the guiding factor of our transformation to a vibrant, digitally centric company. We're focused on expanding our digital audiences, growing our digital subscription base and revenue, and diversifying and expanding our offerings for regional and local advertisers. We expect continued execution of our strategy will drive more than $435 million in recurring sustainable digital revenue by 2026. Our strategy leverages Lee's key strengths, our local market expertise, our industry-leading digital revenue growth, and our commitment to the highest quality news to build a larger recurring revenue base and generate long-term top-line growth. This growth expected to achieve $435 million of digital revenue in 2026 is being driven by increased subscription revenues from initiatives in Pillar 1 and 2 and increased digital advertising revenue from Pillar 3. Our Pillar 1 strategy is based on expanding our digital audiences with investments in user experience, multimedia presentation formats, and rich high-value content. We're driving higher engagement, outsized traffic, and monetization. As an example, video revenue was up 98% in our most recent quarter. Now this is off a modest base, but it's indicative of the attractive market opportunities we have, leveraging our trusted brands, our strong market positions, and in-house capabilities. We continue to make value-added investments to drive additional growth. This is important as it aims to increase our digital audiences, thereby increasing our addressable market for digital subscribers. Pillar 2 is the expansion of our advertising base of digital-only subscribers and revenue by converting more of our vast addressable market to subscribers. We're leveraging our cutting-edge data and technology and expanding offerings for paid and niche content on topics where we have expertise and a unique selling position. These tactics are driving an increase in total subscribers and positions us to achieve our goal of reaching 900,000 digital-only subscribers by the end of 2026. And as I mentioned earlier, Lee's already at the halfway mark to that target. At the end of the fiscal quarter of 2022, Lee had 450,000 digital-only subscribers, a 57% increase year over year. Reaching 900,000 digitally-only subscribers and increasing our average digital subscription rates are the important goals in Lee's digital transformation as it increases the base of our subscription-based digital revenue. Growing digital subscribers requires both expanding our addressable market and strengthening our visitor-to-subscriber conversion rates. In addition to offering more attractive niche subscriptions that appeal to targeted audiences, we're also deploying advanced email and social media strategies using our extensive first-party data and technology developed by Town News, our SaaS content platform company. These efforts are focused on a huge, attractive, addressable market. Today we have 47 million unique visitors each month and 12 million loyal readers who are highly engaged with our digital platforms. Our goal is to turn these readers into our base of 900,000 digital subscribers, generating strong recurring revenues. And as I mentioned, we're more than halfway there. We're also converting readers into digital subscribers faster than our peers. As you can see on slide 11, Lee's digital subscription growth rates far outpaces Gannett and the New York Times for 9 quarters running. This demonstrates a strong track record and high-level execution, and coupled with talent and technology investments, we believe will continue to be an industry leader. Our continued momentum makes us confident in our ability to reach 900,000 digital-only subscriber target in 2026 because it only requires converting a modest portion of our total addressable market. Importantly, while we predict a brisk and steady climb in digital subscribers, we expect to deliver even faster revenue growth over the period through a modest increase in ARPU. As we execute our Pillar 2 plans, including targeted offers, premium pricing for niche products, and using data and analytics to maximize pricing actions, we believe Lee has a clear path to grow our digital-only recurring sustainable subscription revenue to $100 million in 2026, representing a 29% average combined growth rate. To sum up slide 13, Lee has already established a strong track record for accelerating digital subscription growth, and with the planned incremental investments in talent and technology, we're on track to reach our goal of 900,000 paid digital-only subscribers in 2026. Continued execution of that strategy is expected to generate recurring sustainable digital subscription revenue exceeding $100 million. Turning to slide 14, our third pillar focuses on diversifying and expanding our offerings for advertisers. And we're doing that in two ways. First, through Amplified, our full-service omni-channel digital marketing agency that provides local and regional advertisers with sophisticated custom solutions, including consulting, media buying, and analytics. Second, by maximizing the revenue opportunities on Lee's digital platforms. Our owned and operated properties attract massive audiences. We're offering more video inventory and branded content opportunities to boost our digital ad revenue. Both of these initiatives are supported by Lee's Vision platform. Vision is a proprietary sales enablement and execution software tool powered by Amplified. As seen with our strategic partnership with Mudd Advertising, a leading full-service automotive advertising agency, we've licensed Lee's innovative Vision platform to enable our partner to fully support its cross-channel marketing efforts. Industry-wide, omni-channel advertising for regional and local advertisers is expected to continue its double-digit growth in the next 2 years. The Vision platform allows us to capture the significant growth in this category. The Vision platform transformed local and regional advertising for Lee. And our Amplified digital revenues are growing rapidly with advanced data-driven ad tech, specialized category expertise, scalable custom video content, and powerful first-party data access, along with a well-trained digital-savvy sales force. Amplified is a strong partner for local and regional business looking to drive growth. We continue to expand Amplified's capabilities, including building out new e-commerce solutions to offer to our ad partners. In fiscal year 2022's first quarter, Amplified revenue grew 69% year over year. We continue to see significant growth runway with Amplified as we execute our strategy. We're projecting $65 million in Amplified revenue in fiscal year 2022 to reach our target of $100 million in annual Amplified digital revenue in 2024. Amplified's dramatic growth trajectory is fueling our 5-year digital advertising outlook. We expect to reach $310 million of annual digital advertising revenue in 2026, of which about $200 million will come from Amplified. So summing up our advertising strategy on slide 16, Amplified Advertising is our major growth engine for our digital transformation. Our Vision platform uniquely positions us to capture continued double-digit growth in omni-channel digital advertising, and we expect to generate recurring sustainable digital revenue exceeding $310 million in 2026. And now I'll turn it over to Tim to discuss our latest financial performance.
So thanks, Kevin. So Kevin spent some time talking about our 3-pillar digital growth strategy and how that is the foundation to driving value for all of our stakeholders. So I'm going to spend some time continuing the conversation with how we manage our cost structure. So as you can see, we've had a long history of responsibly managing our cost structure. And the acquisition a couple years ago created a larger opportunity for us to leverage scale and drive efficiencies in our organization. And we continue to have opportunities to do that today. We have more than $300 million of costs directly tied to our legacy print business that we will continue to manage as those revenue streams continue to decline. At the same time, while we're focused on managing costs, our number one priority is to achieve the milestones that Kevin laid out with respect to our digital revenue. And in doing that, we recognize that our strategy requires thoughtful investments, constantly evaluating the talent and expertise in our organization to ensure that we have the right people, the right expertise to drive the growth that we're talking about. And so as a result, we're making targeted investments to fuel our digital growth strategy. We expect the investments in talent and technology to increase our cost and increase digital cost of goods sold will be approximately $36 million, which will have an impact in FY22. Slide 18 describes those targeted investments in a little more detail. So transforming Lee's model from a legacy print-centric business to a vibrant, digitally centric business requires some significant investments in talent and technology. For example, on the talent side, we're focused on bringing in team members with AI expertise as we lean into more data-driven products at Amplified, looking at executive producers to curate more of the custom content that help generate 98% year-over-year in video revenue growth, and user experience experts as we continue to transform the presentation of local news, as Kevin talked about with Pillar 1. In terms of systems and infrastructure, our planned investments include data lake technology to more efficiently store all of our growing pool of first-party data, as well as data visualization tools that our newsrooms can use to analyze data to help better drive user experience and reader engagement. And we anticipate in this year, this fiscal year, that we will have $15 million of incremental investments to help drive our growth. So let's move over to talking about Lee's balance sheet, which we continue to strengthen. Principal amount of debt right now is $463 million. That's down $113 million since our March 2020 refinancing, or down 20%. As a reminder, our credit agreement with Berkshire, who's our sole lender, has favorable terms that are incredibly important for us as we execute our strategy, as it allows us to make the necessary investments in talent and technology that we just talked about to help fuel the recurring sustainable digital revenue growth. On the pension side, all of our pensions are now fully funded, and we expect no additional contributions to those plans in the current year. And finally, we continue to identify opportunities to monetize our real estate, which will facilitate additional debt reduction. We generated $25 million in real estate proceeds last year, and we're looking at 20 to 30 again in FY22, with $14 million already executed. And as a reminder, our goal is to achieve our long-term target leverage ratio of 2.5 times by 2026. So let's take a look at our most recent quarter financials for fiscal and some outlook for fiscal 22. So we're very pleased with the results that we've seen, as we've seen solid revenue performance, especially related to the digital revenue streams that Kevin mentioned. And we continued cost control of our legacy print business. We've also started making targeted investments in talent and technology, and this performance has us on track to meet all of our digital revenue targets for the fiscal year, as well as our adjusted EBITDA target. Here's a snapshot of our most recent financial performance. Revenue for the year, last 12 months into December, was $785 million. Total digital revenue represented 27% of that. That was up from 22% a year ago. The improvement in the mix of our revenue is because of the investments that we've made in talent technology and the growth that we've seen on the digital side. Changes in operating expenses are largely reflective of the incremental investments we're making, offset by the reductions in our print legacy costs. Net income for the first quarter was $13 million, and adjusted EBITDA for the quarter was $26.1, and over the last 12 months, adjusted EBITDA was $102.6 million. As for our fiscal 22 outlook, we expect to deliver continued digital revenue growth from the execution of our strategy. We expect to achieve 495,000 digital-only subscribers, $33 million in digital-only subscription revenue, $175 million in digital advertising and marketing services revenue, and $230 million in total digital revenue, and adjusted EBITDA in the range of $95 to $98 million. So let's take a look at our 5-year outlook. So we've provided some short-term and some long-term targets to give better transparency into our digital transformation. And this table summarizes our outlook and beyond. And as you can see, we expect to make significant continued progress on our digital transformation, culminating with $435 million in 2026. So I trust this gave you a good background on Lee, the progress that we've made in our digital transformation, and the direction that we're heading. So just to connect the dots on our investment thesis, Lee has developed and is executing rapidly a digital transformation, and we aim to grow our base of recurring, sustainable digital revenue. That strategy is the foundation for our investment thesis. Execution of that strategy is expected to facilitate debt reduction and an improved balance sheet, achieving our long-term target leverage ratio of 2.5 times. And so with an enterprise value of around $650 million today, debt reduction of $10 million results in about $2 a share improvement in our stock price at static multiples. Now combine that with a digital revenue expectation of $435 million by 2026. Certainly a case could be made for even margin expansion or multiple expansion, creating even more value for our shareholders. So as you can see, we're incredibly excited about the future, where we're headed. We've got the right strategy, the right team, and we are looking forward to continued execution. So at this time, we're happy to take any questions you have. Yeah, go ahead, Mike. Yeah, in terms of our historical margin relative to where we are today, obviously a lot of things have occurred over the last several years. Certainly COVID had an impact on our margins. Acquisition a couple years ago of a company that had lower margins, had an impact on our margins. At the same time, we're making investments, and that's something that we know is necessary. We need to make sure we're connecting the talent and expertise with our strategy and making the necessary investments. Otherwise, we won't have a chance of hitting the numbers that
the only thing I would add to that is we're still seeing pricing power in our full access, print subscriber base. So we're taking that. And at the same time, our total audience is growing. We're also growing the ARPU for digital only. So it's a real balancing act, managing the skyrocketing of our digital strategies and then managing a strategic decline of our legacy print business. But we'll definitely take cost out with legacy business as the timing is right.
Yeah, good question.
Any other questions? We only have a few minutes.
Yep. One in the back there. Go ahead. Yeah. So I think you're hinting at this slide here, where we have 9 consecutive quarters of industry-leading digital-only subscriber growth, and you can see quarter by quarter consistent outperformance of our media industry peers. Yeah, go ahead, Mike.
Disinformation from other mediums? Is it, or just, fake news, or whatever you want to call that? Or is it like specific things that you're targeting that's driving circulation, that's driving?
Yeah, I can hit if you want to jump in, but certainly I think it goes to the power of the local content that we provide that nobody else is really covering with the depth and breadth of coverage that we have in our local markets. So I think it just is proving out that people want this content. They're hungry for hyper local content in their local markets, and that's the type of information that we're providing.
And the last thing I'd add is we've absolutely flipped the look and feel of our digital platforms. They're highly video centric, podcasts, all of those sorts of things are all embedded in them. You can still get a digital platforms like page flipping, but the vast majority of them we've really amped up the sophistication of video and other multimedia formats.
Great. All right. Yeah, we've completely transformed the presentation of our websites, of our digital products, to be a lot more photo and video centric. So all of our products have video capabilities.
The vast majority of it is, and then we've labeled it if it's video, strictly a photo, or if it's also read. And what we found is most of the new subscribers are getting like the enhanced multimedia format of our digital platforms. Some of our older digital subscribers prefer the page flipping print version.
Yeah. Great. Well, thank you for your time and interest. Certainly look us up if you have more questions.